If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. I had to make another Trias update for you guys because something important has just flashed on this chart that could be signaling that we are topping out. And if this key level does not hold, then we're looking for a correction. If this key level does hold, we will continue to these targets. I'm going to analyze this all for you guys today, so make sure you stay tuned. If you want to get educated, wait until the end of this video for more information. Please do like, subscribe, comment, and share. We had a great influx of subscribers yesterday, and we're 200 subs away from 7k, so make sure you share these videos to get these out to other people that follow Trias. And so we're back with another update, simply because in yesterday's video, we were suggesting that, yes, we've reclaimed the $4 psychological level, and then we had adjusted the box here because we had to draw a new box at $4.50 to $5, very key psychological levels here. We can see that we actually got rejected off that $4.50 area from today, in fact. So in yesterday's candle, we actually saw that we couldn't push through the $4.50 psychological level, as it's just a brick wall, this 50-cent area. We've seen a wick rejection, suggesting that there is now weakness in the bulls, and with that, the direct next candle, the bears are starting to take power. And if we close as is right now, this is a pattern that I teach about in the course, very easily tradable from key levels of support and resistance. This one actually being a bearish one, so we'd be looking at for that at resistances or lower highs. And this is a bearish engulfing over here, so a tradable opportunity. Let me know in the comment section below if you've traded this or are going to, because you could then look for entries on the lower time frames, being given that this is the daily time frame showing a bearish reversal candlestick pattern over here. And then we know that the area that we now need to hold and where we're coming back down to is this golden pocket. And in yesterday's update, we were suggesting that the reversal wave has been created, and all we now need to do is fall back into this key area, hold above the 0.5 Fibonacci at $3.50, and we keep these targets to the upside between $5 and $12, all valid. So an incredible update yesterday where we're looking at very bullish things and how the future of Trias is looking bright. But again, guys, there's a criteria to all of it, so we can all get excited. I'm never excited with these things because I know very quickly it can all go south and invalidate this path, and that's how trading all works. Essentially, we're on this path now, but it can be taken away from us, and all we realistically need to do is lose our uptrend, and our uptrend is signaled by the 200 EMA. So yes, there have been moments on this path up over the past months, well, since the beginning of the year. There's been moments where we have fallen below, but very swiftly got back above, confirmed its support, had another new high. But over here, although we had lost the 200 EMA, we'd say, okay, we've now lost our uptrend. If we use it as resistance, then we're pretty much confirming this. And then we start to deviate from the bearish path, which is continue low. We put in a higher low, reclaims it, then another lower low, and you say this is lower than that. But all while, if we're looking back at the previous lows over here, the higher lows, we can see that we have a low right in this area. Then we have another low in this area. And although we lost the 200 EMA, we're still maintaining this. So going forward, realistically, you just need to hold above $2.50, and eventually we will meet these targets. But when we talk about reversal waves being created and the Fibonacci tool being used as a retracement tool, knowing that this is actually the deepest we could go and still continue lower, but understanding that actually getting to this level, the reversal wave is being created. And yeah, we could just still be in a retracement where we've seen this impulse down, exhaustion phase, and then continuation to new lows. However, you must understand the reversal wave has been created. So all you realistically need to do from here is just confirm $3.50 as support. And then we should see eventual break of this 50-cent range between $4.50 and $5, which would then take us to the higher price targets between $5.80 and $12.50 up there. But the reason that I made this video, and yes, I've just shown you the bearish path, but the reason why I'm looking at this as a key level right now is not just because it's a psychological, but also something that's appeared for the very first time on a time frame that I'm pretty sure not a lot of you use. Let's say 95% of you wouldn't be using this chart, especially if you've got the free version of TradingView. It just doesn't allow you to go on specific time intervals like the 5-day time frame over here. And with this 5-day time frame, as Trias has not really been here for too long, we can see that we're only actually able to find 2 moving averages when we use 3, and the third one that we use is the 200 EMA, and we need, of course, as we're on the 5-day time frame, 200 of those to appear. And in fact, yesterday, well, no, the last 5-day period, yeah, that closed yesterday, was pretty much the 200 5-day candle. And we know that the 200 EMA, if we're below it, it's a downtrend. Above it, it's an uptrend. And we can see that it's actually appeared right here. How do I know that this is not a drawing? I go to my moving average indicator over here. We can see as I hover over these candles, there's a circle with a cross. But as I hover over this point and go to where we are currently, if you look at the right over here, it's telling us the exact price that's 200 EMA is actually sitting at, $4.46. So it's pretty much at our $4.50 psychological level, and it's saying that while we are beneath this point, on a technicality, we have to say that this could be considered our top, and that we're looking for lower, as this would be considered the top of our uptrend. So the only thing that could keep us bullish in that we break this level eventually are where these moving averages are sitting. And look where that 25 days, bang on the $3.50 area. So what I'm gaining from this information is that all we need to do is come down back into this support and then look for a break of this area, and then there's nothing stopping us, because this is suggesting at $4.50 that that's the top of our downtrend. Break that and there's no top of our downtrend anymore. It's like looking for new highs. We're going to be in a nice we're going to get these nice bullish movements until we meet some key levels of resistances. Of course, we can already look over here and find that there will be a struggle between $7.70 and $8.60. Let's calm down. We're still at $4 and under 5. But yeah, all we now need to basically do to invalidate any further downside back down to these next lows over here, about $2, which is something that we were talking about. If this never actually was broken, we would see $2 down here. And we broke above that level, so now we just need to confirm its support, have another go at breaking through this 50-cent range resistance, which is also the 200 EMA, and then we will actually see these targets. I think at first, let's not get too excited about these 10 to 12, 14 targets. I think we need to focus on the $5.80 to $8.65 area, and this is where I look for correction. If we do not correct over here, we'll have one more go at coming up to $14, and that's where we will correct. I will be here to update you guys daily if anything does change, but please keep an eye. $3.50, we're looking for that to hold over these next days and weeks. Thank you guys so much for tuning in. Like, subscribe, comment and share. We're 200 subs away from 7k, and if you want to get educated so you can read the charts exactly like me and actually be taught hand in hand with myself, take action on the one-to-one mentorship, you're also going to gain 3 months in my chat, and with that we do weekly group live calls. So not only are you going to get 5 to 10 hours of my personal one-to-one help, you're also going to be part of 2 weekly group calls where we literally do live mentorship, so you get further mentorship sessions every single week. Thank you so much for tuning in. Use the links in the description down below, or listen to this right now. If any of you are interested in learning how to trade just like me, there's multiple options. Click this ebook. It covers all the strategies that I use in these YouTube updates, so you will have all the same skills. Covers the Japanese candlestick, chart patterns, support and resistance, why I use EMAs over trend lines, Fibonacci's, divergences, and again, using these all together to profit using them. I've also got a discount on my course at the moment, which ends at the end of this month. So that's down to £100. You also gain free access to my Discord community for the next 3 months, where you can expect to be a part of 12 to 24 group mentorship calls. If you want something that's a bit more personalized to your needs, then join my one-to-one mentorship plan. You can choose 5 or 10 hours of my one-to-one help, and included will be the 3 months free in the community, as well as my 6-hour long video course.